Hi there, it's Grant Miller from inspiredfinancialplanners.com.au. A really quick video today about what is income protection, why it matters, and why anyone whose family or themselves rely on that particular income to pay the bills and do everything really needs to make sure they have income protection quite urgently, actually. Now, first, I just want to help you understand what it actually does. So if you're sick or injured and you can't go to work, it replaces up to 75% of your income plus maybe super. Under those kind of circumstances. A group policy or a policy through your super will have really basic definitions around that. A retail policy will be much more generous most times to be able to provide you with actually a lot more benefits than just that. For example, if you were to experience a fracture or something, then you'd basically be guaranteed a payment whether you could work or not. It's actually pretty cool. It's worth investigating. Now, there's three things that are actually really important to know about what is in your income protection policy or how to understand what it is. Those three things are firstly the waiting period, which is how long you need to be off work, satisfying the definition of your income protection policy, before you're eligible to start receiving benefits. It's also important to know that most insurers won't pay until 30 days or a month after you're actually eligible to pay. Now, most super funds will offer maybe a 60 or a 90-day waiting period. Means you've got to be off work for 90 to 120 days before you actually start getting paid something. The second thing that you need to be aware of is the benefit period, how long you're going to get paid. A lot of basic policies will pay you for 2 years. Most of us have a lot more left in our working lives than 2 years if something major happens, which we're off work for a period of time. 2 years is not a great amount of time to be off work getting your benefits, because then you're stuffed after that. But that's the first two things, is your waiting period, how long you wait to get paid, your benefit period, how long you get paid for. The third thing that you really need to be aware of is your benefit amount. How much are you going to get paid while you're off work? This is really important to know, because if your benefit amount doesn't actually cover your bills, then you could be going backwards. And if you don't have much in savings, this is really detrimental. Even if you have savings, it's critical, because it's going to send you backwards if you don't actually cover enough of your income to cover those bills and then some, ideally, in case there's any out-of-pocket expenses that are associated with the fact you're off work due to injury or illness as well. Now, if you need help, you don't understand what you're spending, I've got a spreadsheet I can send to you to really just simply understand what are you spending that you can then compare to your income. So use pay slips, use your tax return, anything to show what's your actual income. You can compare that to your expenses and just really simply understand, am I earning enough to pay these bills? And if I needed income protection, how much would I actually need? Now, I'd love to help you get this set up right. What you can do, if you're relying on insurance through your super, send me through a statement from your super fund. I'm happy to have a look through it and help you to better understand what it is that you have. An alternative as well is to set up an appointment with me. Let's have a chat about how much you have, what you need, and just basically make sure that you're covered right. Look, there's no cost for that initial discussion. Definitely reach out and let me know if that's what you want to do. The other thing you can do as well is join the Inspired Money Tips group on Facebook. I'll make sure there's a link as well. If you've got any questions about income protection, leave me a comment, because other people might have that same kind of question. It'd be really useful. But if you want to chat about this, offline or something, send me a message and I'm happy to reach out and have a chat with you as well. Look, one final benefit of income protection is if you're paying any premiums out of pocket, up to 100% of those premiums can actually be tax deductible as well. So if you're earning anything over $37,000, that's about a third of your premiums, which could be tax deductible and you could get back when you lodge a tax return. It's pretty cool. A policy that I can help you set up can be paid entirely or partially through super, and you can just pay for some of the really solid benefits out of pocket as well. Or if it's going to be beneficial, you can pay 100% of those premiums and really claim a good chunk back on your tax. It's been Grant Miller from inspiredfinancialplanners.com.au. That's your Inspired Money Tip for today, and I look forward to seeing you next time. Bye for now.